Hi, everyone. Mike White here. Welcome to this week's vlog post. Well, it's Thursday, and we're concluding the first week with the new loan level price adjustments. And surprisingly, or maybe not surprisingly, there aren't as many questions as I thought that there would be. Maybe the word hasn't gotten out yet. Maybe the market movements and the impact on pricing isn't as obvious to people just because of the fluctuations, maybe a bunch of other things about it, or nothing at all. But that said, we still need to be aware of what's going on and prepare ourselves for the eventual questions that are going to happen. I know there have been some of you have commented to me on them, some of the issues, some of the stories. And I think it's really important that we pay attention um, to our own local markets and our own local reality. As I've always said, national news and movements have local impacts to varying degrees, and the impact in your market may not be as significant as it is to many others. So that's why I put this out here and say you've got to actually look at it and do the math. So one of the things I did hear from one of my clients was a specific case when it came to credit scores and loan values. Because as I said before, and I'll say again, FHA may be a huge benefit when it comes to the monthly payments for those people above 680 credit scores. And, we don't often think that way, but you have to think that way because I, again, just had a circumstance where a customer 718 credit score, and he saved between the difference in the interest rate on the loan and the PMI payment for his credit score and his loan to value at 3% versus going FHA. He saved more than $200 a month. Again, the FHA versus a conforming, the FHA MI versus the PMI at that loan to value and at that credit score. But that's a specific case. So people are talking about 20 or 30 or 40 bucks a month or whatever the case may be, depending upon the loan size and the credit score and the loan to value, et cetera. But the reality of it is in this particular case, what I knew was we had a borrower, we had a 718 FICO score, and between the comparison straight up and down with the FHA, based on the FHA pricing and the MI versus the PMI and the conforming pricing, the person was able to save more than 200 bucks, which is significant. Now, I know some of you, we've talked about this in the past, that there are some agents in some markets that have a great disdain for FHA borrowers and will often try to convince their sellers not to accept offers from borrowers that are using FHA financing. And I think it's a shame that there are a few ignorant agents out there that continue to perpetuate and limiting the buyer, limiting the FHA buyers from competing for those properties. And I think when you think about it, why would any listing agent in the planet want to limit the buyer pool for their seller? Don't we get the best price when there's the greatest demand? When one person is the only bidder on your property, isn't it likely you're going to get less money for that house than if there are multiple people interested in buying that house? Won't the house sell more quickly if there are more buyers in the buyer pool that can include that in one of their choices? So I think, this whole FHA thing with a certain segment of the real estate community is, really sad, because they should know better. And to be honest, why is it that we can't explain? They come back to, oh well, the FHA appraisal, and condition of the property. Well, aren't all the things that are going to show up in an FHA appraisal the same things that are going to show up when the client does a home inspection? And virtually every house has a home inspection done. And what are we talking about? Is there a broken window? Is there peeling paint? What are we talking about? And the reality of it is, and how many houses have that significant number of repairs anyway, that where FHA is going to be a difference versus a conforming loan. Again, it's not most of them. Again, maybe the occasional one, but again, those bigger challenges in those houses can be addressed in any number of ways. And I think it's really important that we not deal with an old excuse. So the time has come for really good mortgage professionals to share actual information, do the numbers. Math is really helpful. Maybe you want to interview an FHA appraiser about the FHA appraisal process. Maybe you want to bring those issues to the front. Maybe you talk to your local real estate board. Maybe you do a webinar. Maybe you do lunch and learns. But it's really important to take a look and share the information and dispel the myths, because right now I'm telling you, FHA is going to be a bigger player for a lot of people because of the cost savings. And again, pay attention, because in August, what are you going to do when loan level price adjustments start adding on for total DTIs of 40% and higher? So this is not an issue that's going to go away. In fact, it's going to get larger in the months to come. So if you're not going to get out there and understand that FHA could be a very important tool in your toolkit for your buyers in your community, you might be missing out. As always, questions or comments, Mike at imtcoaching.com. Take care.